Hey everyone, my name is Arya and we are officially in a recession. So it was declared that in the start of the month of September 2020 that Australia has entered its first recession. So that's pretty big news in itself. But also another interesting news is that PayPal is going to join the buy now pay later industry in the somewhere around the end of 2020. But also we had a very big sell-off of tech stocks happen in the start of September 2020. So these are pretty big events that took place, and that's just the first week of September. But what I want to talk about in this video in particular is a company called Zip-Co. I want to talk about what these current events that are taking place, how it's going to reflect onto the company Zip-Co, and whether if it's going to survive. And the share price, whether it'll increase, whether it'll diminish. We're going to talk about that more in detail. I want to focus on 3 points in particular. First thing which I want to talk about is the recent developments around Zip-Co and their announcements. So I want to talk about the FY20 results and also about their partnership with eBay. And then I want to focus onto these current events that are taking place and how it's reflected into Zip-Co's share price and what is going to happen with Zip-Co as a company itself with these current events taking place. And then the last bit which I want to talk about in this video is whether Zip-Co is worth investing in at its current share price and with the current events taking place, whether it's a good opportunity to maybe buy, or if you are a current shareholder holding it or selling it off. And we're going to talk about all of that in the video. Of course, I'm not a financial advisor. This is just purely based on my own research and my own opinion. And I hope you guys enjoy it. So sit back, relax, enjoy this video. Without further ado, let's get right into it. So the first thing I want to talk to you about is Zip-Co and their recent announcements that they've had. So they've had some very interesting announcements. And for those of you who don't know what Zip-Co is as a company, it's basically a company which is in the buy now, pay later industry. And what it does is basically allows people to be able to buy products from merchants in installments. So people basically buy products from the merchant, and then Zip-Co basically pays off the merchant, and then the consumer pays the Zip-Co in installments. So what Zip-Co does is, and how the revenue works and the business model works, is they charge a transaction fee from the merchant. And not only that, if the consumer is late in their payment, they charge a late fees as well. So that is basically the buy now pay later industry and Zip-Co in particular. And they have a lot of competitors out there. Notably, the biggest competitor would be Afterpay, and then you've got Sezzle, you've got Tyro, you've got OpenPay, you've got a lot of other companies out there. So now, of course, this makes a buy now pay later model very appealing to both consumers and merchants, because A, for consumers, it allows them to buy a product instead of paying it all upfront. It allows them to pay it in installments, so there's been a lot of consumers being able to purchase more products. And likewise for merchants, it helps boost their sales, because of course there'll be a lot of consumers buying products from them. So that's why it makes the whole buy now pay later very interesting and very appealing to both sides of it. So it's sort of a win-win. But to talk a bit more about the recent developments around Zip-Co and why it led to the share price increase. So the share price was sitting somewhere around in the month of August, ending of month of August, the share price was sitting probably at somewhere around 9.5 to 9.6. And since then it's had a dip. But to talk a bit more about the announcements, they had basically a few announcements which were notable. One of them being the acquisition to QuadPay. So they did an acquisition with QuadPay somewhere around the quarter of June, and this actually made the share price go high, because QuadPay was a buy now pay later company in the US market, and them doing an acquisition with QuadPay allowed them to enter the US market. So that made it very appealing, because already we have now ZipPay in the US market thanks to QuadPay, and now in the UK market and some other markets. But most notably, they are in the Australian market. So this makes it very appealing, and the growth also, it increases the growth percentage. So of course the share price did go up, but what was more interesting was two other announcements which they made, which was the FY20 results and also their eBay partnership. So we're going to get into that a bit more detail. Now, to talk a bit more about the FY20 results, this is basically what they released. So they released a $2.1 billion in transaction volume. That's what they achieved, which was in the FY19, it was sitting at 1.1 billion. So that's a 91% increase. And the same goes for their actual revenue as well. That increased by 91%, which is now sitting at 161 million. And the customers increased by 62%. So now it's past the 2 million mark and it's sitting at 2.1 million customers. So that is pretty impressive to see. And the receivables also increased by 76%. And the retail partners also increased by 51%, which is sitting now at 24.5K. But what is interesting and what probably made a bit people concerned is the net bad debt. So that increased to 2.24%, which is actually quite higher than what they had in the FY19. The FY19 was sitting at 1.63%. However, what is actually very interesting to me is even though the net bad debts did increase, the arrears were actually decreased. So somewhere around last year, the arrears were sitting at 1.89, but now it's sitting at 1.33%. So that is some very interesting numbers to see and put into perspective. So definitely ZipPay is increasing in value. It is growing at a 90%. And with the acquisition to QuadPay and their UK expansion, this company is definitely going to increase in value in just looking at the numbers. But what impresses me more is their whole eBay announcement. So they basically announced around the end of August that they had done a partnership with eBay, which allows them to be able to provide or offer to 40,000 Australian small and medium-sized businesses the opportunity to access working capital via eBay Marketplace. So that's a very interesting announcement, because this basically means that ZipPay is now providing a line of credit to actually small merchants who are in eBay. So they're getting into more towards the merchant side and using their whole model around what they have currently around consumers. They're going to now provide a line of credit for people on the eBay. But also another interesting thing is not this now that allows them to be on the eBay platform, but also they already have a partnership with Amazon, which is basically providing the customers with purchasing products of Amazon via ZipPay. So now they're in the two biggest retail industries online, which is Amazon and eBay. So of course, based on these announcements, the share price did go up, and it went up drastically. Like we saw its all-time high sitting at $9.65, where the share price was at somewhere around the month of August, ending on month of August. But then suddenly the month of September came and the share price went down by 30% almost, and we saw a drastic fall in the share price of ZipPay. So what actually led to that is what I'm going to talk about, which is the second part of the video, which is why the sudden dip in the share price. Well, there's actually a few reasons for this. One of them being notably the PayPal announcement that took place. So PayPal announced as of 1st of September that they'd be entering the whole buy now, pay later market. They're going to be releasing a product called Pay in 4, which is going to be similar to what the current buy now, pay later products are out there. So basically purchasing a product and paying it off in installments of 4. So this has posed a serious threat among the current companies in the buy now, pay later market, and it has caused panic selling among investors. Because of course, just to put things into perspective, like if you compare, for example, PayPal, they've got a total of 26 million merchants already using their service. And then putting that into perspective with what current ZipPay has, they have 24,500 merchants. So that itself is a very big gap, and that has caused a lot of panic selling. But not only that, the other threat that PayPal poses is that they are not going to charge an additional transaction fee for using that service. It's already included in the merchant fees, which currently they're using PayPal service. So this will basically have to cause a lot of problems around Afterpay, ZipPay, and a lot of other companies, because currently those companies are charging merchants a transaction fee. So they will need to work something around that in order to be able to compete with PayPal. So this provides a serious threat among the current buy now, pay later companies, notably Afterpay, ZipPay, Sezzle, Splitit, Tyro, all those ones out there. And because of that, you saw in just a day, the share price decreased by around 11 to 12%. But another big news around the whole share price decrease was Australia entering into a recession. So Australia entered into a recession. Well, we already knew that it was going to come into recession, but officially it was announced as of September that Australia is in a recession. And this is the first time it's been in a recession since the last 29 years. And this recession is very different to all the other recessions out there, because it is a pandemic-induced recession. Because other recessions are, of course, because of the global financial crisis or other reasons. But this one is very unique because it's based on the pandemic. So until a vaccine doesn't come out, this recession might continue. So there's a lot of challenges of its own which ZipPay, this company, is going to basically face. First, the threat among PayPal, and then second, also the whole recession that is taking place. And not only that, but also it's about the future. So if PayPal made this big move of joining the buy now, pay later, what does that leave to other online payment gateways, best known as Stripe? Maybe they might join in the future. So there's a lot of concerns right now. And because of that, we can see a lot of panic selling happening around the share price. And that has actually made the share price dip quite significantly. And also another big news was that in the first week of September, we saw a lot of sell-off happen. So a lot of companies dipped in share price because a lot of people started taking profits out of those companies, basically selling their share prices at profits, and that led the whole market to come down in value. And the biggest one were tech stocks, and this also caused a lot of the fintech stocks such as ZipPay, Afterpay, and all the other companies to decrease in value. So that's where you were seeing the 9.65 all-time high come down to a current 6.65 or 6.76. But that is a big dip, and these were the big events that took place in just a matter of a week, which made it come down. So this shows that how volatile the market can be. But a bigger question right now is, based on what's currently happening, what is the foreseeable future? Whether this company can survive these events, and whether if it's worth investing in this company, whether it's for short term, whether it's for long term. So what is really next for this? And that's what I want to talk to you about in this next part of the video. But before we get in, if you stuck around so far and you've enjoyed the video, please do give it a thumbs up. And if you're watching my video for the first time, please do subscribe to my channel. I post a lot of videos about different stocks and stock trends and doing the analysis. So if you're interested in that, do subscribe. But moving on to the big question, what's next for these companies? So looking at ZipPay as a company, I think the fundamentals are pretty strong. Like they've shown in their FY20 results a 90% growth. And not only that, but their acquisition with QuadPay in order to enter the US market and their expansion in the UK market. Not only that, but they're already one of the dominant buy now, pay later products in the Australian market, puts them at, fundamentally speaking, a very good position, and they will show more growth in the near future. So it is a good company, I personally believe, fundamentally. However, the challenges which it faces with their QuadPay expansion into the US, because of course there's PayPal as a payment provider now, but consider this, PayPal has up to $30 to $600 in transaction limit, but ZipPay does provide in Australia up to $2,000. So of course that model going into the US will be two different market sectors. And I think the market is pretty big enough, and you consider merchants in general, they just want to boost their sales. So of course they will adopt PayPal, but also adopt ZipPay. And not only that, but other buy now, pay laters, because the more merchants adopt different payment methods and give the flexibility towards consumers, the more they boost their sales. So I think the market is big enough for all the buy now, pay laters to enter and to be able to lead over there. However, their growth percentage might be a bit of challenge around the whole transaction fee, and that's something where Zip will now need to decide what they're going to do about it. But also another thing is them moving down towards giving a credit line to small businesses with their eBay partnership, puts them in a very good position, and that might be a whole new opportunity for Zip to get involved in. So I think fundamentally speaking, it's a very good position. However, another challenge that Zip faces is the current recession in Australia, but that is more of a short-term challenge, because right now what we got in place is the JobKeeper and JobSeeker, which is sort of providing a stimulus check, so people are still able to spend. But in the coming months, they're going to do another cut. And when they do a cut, that's when it actually poses a challenge whether people will still continue spending. And when Christmas around the corner, only time can tell. But I think that's more of a short-term thing, because of course we've got the pandemic, and the pandemic is going to end. Like it's going to probably end in another 5 months, 6 months, depends on how quickly the vaccine can be produced when it is actually past stage 3 trials. Now, if you're looking to maybe do a more long-term investment, and if you're planning to buy the shares of this company, I think like currently, which is sitting at 6.7, this company might see a bit of a dip, might even increase, no one knows in short term. But if it does come down to somewhere around the $6 mark, like 6162, or maybe even lower, that would be a good time to get into this company. And as for those who are thinking of getting into it for short term, like I would think that September is going to be a crucial month for the buy now pay later industry, especially for the ZipPay stock. So if you are planning to do stock investing in short term, I would say probably wait for a couple of weeks in the September and see how the things settle down. And based on that, then go and do an investment for short term. And if you are a current shareholder of Zipco, I personally think that especially if you are in losses, it's a good thing to just hold on to. This company will bounce back up again. But if you are in profits, that's really up to you what you want to do. End of the day, I'm not a financial advisor. This is purely my opinion based on my research. I hope you enjoyed this video. If you did, please do give it a thumbs up on YouTube, and please do subscribe to my channel if you're watching my video for the first time. I post a lot of different videos about different stock trends and also doing stock analysis of different stocks. So if you're interested in that sort of stuff, please do subscribe. Until the next video, take care. Bye-bye.